Hey, hello everyone. How are you? It's Kay. So this is a recorded video, and today's topic is about the break-even and stop loss. So I will exactly show you how I manage the stop loss and when exactly I move the stop loss to break-even. So this is the video lecture series in the month of August 2022. I have been recording some videos about my strategy, and today's topic is specifically about a stop loss, because stop loss is important. I mean, I used not to use stop loss before, and I had a huge loss. So that's why ever since I always put the stop loss. But we can't put the stop loss wherever you want to. It has to be reasons of where we put the stop loss, and it has to be logically executed. So that's today's topic. So let me switch the screen now. Okay, and as a quick disclaimer, today, as usual, this information on my YouTube channel is basically for educational purposes only. So when you take trades, please do at your risks. And also, if you can please follow the rules and guidelines in the chat and also the comment box below, that would be great. Also, please be careful on the spams in social media. So, as I have been covering the topics, today's topic is about stop loss strategy. This is a PDF where you can download for free, so you can come to the below description and get that PDF for free. So, I have been creating 6 videos, and this is the 7th video about stop loss and the break-even time. So in this PDF, I mentioned stop loss strategy and where to place a stop loss. So stop loss, in terms of stop loss, it shouldn't be too wide, because if it's too wide, then it's not time efficient. And what I mean by time efficient is that if the market goes backwards against your direction, then it takes time for the market to hit the stop loss, or for you to look for an exit timing if stop loss is too wide. Let's say if your stop loss is like 100 pips, then it may take 1 day, 2 days, or 3 days until the market goes back to the stop loss. And the whole time, for a couple of days, you might have to keep monitoring with some losses, with the running loss. And psychologically, it's not healthy either. So that's why I came up with the idea of placing a stop loss as tight as possible, but you extend the profit as much as possible, because I thought this is one of the keys for time efficiency in trades. So this is a reason why I put the stop loss based on the lower time frames. So as a quick recap, I divide these time frames into three categories. And one category is the big or higher time frame, which is major direction. So again, let's say I see daily chart is bullish and 4-hour chart is flat. Okay, I think I have to go backwards. Let's say daily chart is downtrending, 4 hours flat. Then I take the daily to follow and confirm this downtrend by 1 hour. So let's say 1 hour shows down and 30 goes flat. Then I take 1 hour and then go down to either M5, M15. Usually I use M5 to trade. So I check M5, and if I got the right entry confirmation based on M5, 5-minute time frame, then I take the entry. So stop loss should be based on the lower time frame, which is on my entry timing time frame. So in this slide, that's exactly what it shows. So this is M5. This is the pound JPY in 5 minutes. I place stop loss. So let's say when you take sell here, then I put the stop loss above the previous high. If I take sell here, I put the stop loss above the previous high here, And if I put the sell here, then I put the stop loss above the previous high, which will be here. And in average, my stop loss pips is in between 20 to 40 pips. Last year, I was taking 15 to 35 pips. But after this year, the year of 2022, I've seen that the lower time frames becomes more volatile. That's why I decided to take the pips, 20 to 40 pips, so that I can give enough room to decide whether I hold or exit. So, but basically the idea is the same. I simply take the 5 minute. I never take daily time frame or the 1 hour time frame to decide the stop loss. I always take the 5 minute to place a stop loss. So that's one of the things. And between this position to stop loss, I take 2% risk, which is showing here too. The risk of positions should be less than 2% of your capital. So let's say if you have $10,000 account, 10,000 USD, then a 2% will be $200. $200, right? So if your account is 10,000, then you risk 200 at most. And this $200 should be to the stop loss. So you have to calculate the position size manually, lot size manually, which I do you also, and calculate the lot size and execute the entries. So no matter how much the stop loss is going to be, no matter how many pips for the stop loss is going to be, this stop loss should be 2% of your whole account, a capital. So you can actually Google search lot size in Forex, and you can find many websites that you can calculate a lot size. Personally, I'm using the lot size calculator from myfxbook.com. So you can search Google and find that website. But make sure you calculate 2% to stop loss is the key here. And so that means if the market goes back to stop loss, you lose 2%. If your account is $10,000 account, and if the market goes back to stop loss, no matter how many pips to stop loss, if the market goes back to stop loss, then you lose $200, which is 2% of your account. That's the idea for this risk management. I used not to calculate this position size, and I used to lose very big because I didn't know how to calculate the position size, and I didn't really care about the position size. All I care was whether the market goes towards my direction or not, and simply if it goes backwards, I used to exit with whatever confirmations it was. But by doing this, by calculating 2% risk per stop loss, then your account will be managed more properly, and you will never lose big in this risk management strategy. So that's a stop loss strategy. I actually took the trade on the AUDJPY. I'm holding the AUDJPY trade right now. So I will also show you how I took the trade and where I put my stop loss right now. But before doing that, let me also talk about the break-even timing, which is the next topic, break-even strategy. So this is also very important. I think this is the most important idea of my strategy KTS, because after you set the break-even, then you never lose. So what does break-even line mean? That means, so let's say you take the sell here, you took the sell entry over here, and your stop loss was above the previous high in the 5 minute, which was here, and you were risking 2% to stop loss. Whatever, and no matter how much you have in your account, the stop loss should be 2%. And then, as the market goes down this way, you move this stop loss below the sell position here, so that even if the market goes backwards, you don't lose any money. So, some traders never know whether they can move the stop losses. I didn't know either, actually. When I first took the stop loss, when I first set the stop loss, I never thought of managing or moving the stop loss accordingly. But you can actually do it. On MT5, you can drag and drop the stop loss, and you can manage, you can move stop loss. So after the market goes towards the direction, and you move the stop loss below these sell positions, then that means it becomes break even. So even if the market goes backwards, then you don't lose any money. So if the market goes backwards, then the market may go up continuously this way, and it may hit the stop loss, and you will lose 2% of your account. But by moving the stop loss to break even, you can protect your asset. So that becomes, afterwards, your game becomes either break even or win game, which I prefer to play, which we all prefer to play. So in other words, until I set the break even is the game I'm playing in Forex. After I set the break even, simply I leave, because I don't lose any money anyways. So I can be safe psychologically. So yeah, emotionally, psychologically, this break-even strategy is also very important in my system. So that's how I manage stop loss to break even. So make sure the market goes towards the direction, and make sure the break-even timing is not too early, because if the break-even timing is too early, then you may get stopped out with the break-even too many times, and you may end up with having too many break-even trades. So my recommendation is you have to wait until the market goes towards your direction, means either N wave or either I wave, perhaps 30 pips or 40 pips towards your direction, then set the break even is my recommendation. But right now I'm actually on the trade AUDJPY, so let me check right now, because I haven't set the break even line yet and started to record this video. Actually, I'm monitoring by mobile in front of myself, so I'm safe psychologically. But let me check what's happening right now. So first, let me explain how I took the entry on the AUDJPY today on the 26th of August. Let me pull up the trading view. So this is trading view, and I will later show you my MT5 platform. But just to explain what I saw for the entry, I saw the 4-hour was bullish. You can see that the Kumo Senko span B up, A up right now, and Kijun Sen Tenkan-sen up, and Chikou span also above candles. That means it's bullish in terms of Ichimoku confirmation. So based on either daily or 4, which I showed it to you on this slide, this time I took the 4-hour to follow. And then I also check 1 hour, and 1 hour was breaking nicely here. And Kumo was up, Kijun-sen was up also. Right now it's flat, but they were up when I took the entry. So I took, back to this slide, I took 4-hour up and 1 hour up for the confirmation, and took entry on the M5. So on the M5, what I saw was, so I took the entry here today at 9:30 AM UTC on the 26th of August at, I took the trade on 95.48 for the price level, and put the stop loss 23 pips below, which was 95.25. And the reason why I put the stop loss here is because this is M5, 5-minute time frame, and this was the previous low. And that's why I took a relatively tight stop loss. So I could have taken the stop loss here or here, because you saw some minor supports in the 5. but it's reasonable to put the stop loss here because there was a couple of supports here, and this was like a W bottom. So, and this was called neckline, W bottom neckline breakout. That was one of the reasons why I took the entry here, but it's reasonable to put the stop loss below the support level in the 5-minute. If I take the stop loss below the support level on the 4-hour or 1 hour, then my stop loss is going to be, let's see, like a 60 pips or so, like 58, 59 pips down, and that might be too wide. Too wide means, again, it's not time efficient because it takes longer than 23 pips for the market to go down all the way to the stop loss, and you have to be monitoring the whole time the running losses. But instead, my idea is to cut the loss as soon as possible if the market goes back, and also I want to take a bigger lot size, reasonably bigger lot size. So to increase a lot size, you have to take trades with a tighter stop loss or a smaller stop loss. That's why I'm taking 5-minute to set the stop loss, like in this example today. So this is my entry. I took the trade again on the 95.48. I put the stop loss 95.25. This is near the 4-hour or daily resistance, so the market may retrace. So when the market goes back, simply I exit, and to see if the market goes up, breaks the resistance, and re-enter the trade again. But yeah, so that was my entry here. Yeah, and also let me switch to MT5. Okay, so here is my MT5 platform. So I took my entry here. And I put the stop loss below. So right now I'm only running pips of, let's see, this is only 7 pips or so. So if I move the stop loss to break even, this is still too early, because market still may go down, retrace in the 5, and then goes up this way, because still 4-hour is bullish. And 1 hour, Kumo Kijun Sen are flat right now, but Chikou span still above candles and price above the Tenkan Sen. So 1 hour is still buyer's dominant market. So M5 may retrace like this. It's retracing right now, but I don't exit because higher time frames are still bullish. But this is too early to set the break even. So you can't move the stop loss to break even just because you don't want to lose. The break even timing should be reasonable. Otherwise, you will be having too many break even trades, just like I did in the past. So for now, this is not the right time for the break even. So simply, I'm waiting for the breakout of the resistance here. 95.62, and then once the market breaks this level here, for sure I will move the stop loss to break even. In the MT5 and MT4, you can actually drag the stop loss like this and place wherever you want to, but you can actually manage the stop losses like this and set the break even at the right timing, like in this manner. So now the market is not going up in the 5, but again, higher time frames are bullish, so I'm still expecting the market goes up continuously. So, but if, let's say, let me talk about the exit timing in this case, because it's retracing back now. So my exit timing will be, let's say there is a double top now, a neckline breakout is now happening, which is one of my reverse confirmations, and stochastic dead cross is happening against major direction. Most likely I would exit when the market breaks this doji here. When the market breaks this doji, that will be one of my exit timings. But simply I monitor until I set the break even, because I'm still risking 2% to stop loss. I still have to monitor closely. But yeah, and also I want to see how the market breaks. So it looks like it's going down now. So let me see if I can capture a right exit timing here or not. So there's a doji here. There's a pin bar doji. So there's a strong support in the 5-minute. So the market may still be supported here and goes up this way. But again, as I mentioned on the previous video about on the exit timing, the trend starts from the lower time frames. So if 5-minute marks double top and neckline break and dead cross stochastics and breaks this doji, then the market may go down continuously, and 1 hour becomes flat, and eventually 4 hour or daily becomes flat, and 1 hour set to go down as the market goes down this way, and then a daily chart or 4-hour chart also start to go down. So trend starts from the lower time frames, but it tends to follow, lower time frame tends to follow higher time frame directions. So this is where we have to be monitoring patiently until whether we exit or not. So looks like it's still supporting here. Looks like it doesn't break anytime soon. So in this case, I keep monitoring the chart. And so let me talk about also what I mean by monitoring the chart. I say monitor the chart, but I don't usually sit down on the PC and look at the chart like this the whole time. Simply, I use mobile. I use mobile and monitor chart. So after I took the entry, I simply walk away. I usually close the chart from the PC and only check the mobile and monitor chart. So yeah, but when I analyze screen charts for my analysis, I use the PC. But after I took some entries, I monitor from the mobile, and when I move the stop loss to break even, I also do it by mobile. I usually don't do this by PC because it's more handy, and I can simply monitor because it becomes very simple. Now what I'm still waiting for is a breakout of the resistance in the 5, and that I can monitor by mobile. But when it comes to comparing some other charts and screen charts and looking for the entry confirmations, I can't do it on mobile because the screen is too small and I might be missing something on my mobile, and I don't feel like focusing on mobile, and that's why I prefer PC to do. But afterwards, I do mobile to manage a stop loss to break even and trail the profits along the way, which is a topic for the next video. So anyways, this is how I set the stop loss, and when I move it to break even. So again, the important concept is to manage the stop loss. Once you set the stop loss, never stay like this. Never let the stop loss leave like this. You have to move the stop loss because you're risking 2%. You know, one time, when I was away from the chart, I was at the gym, or I was at the kitchen long ago, when I was still in Japan, when I was a newbie, long ago, when I first started to know about the stop loss, and I left the chart. I was away for maybe 10 minutes, 15 minutes, but there was a big news happen, and in about 5-10 minutes, it went down all the way to stop loss and broke the stop loss, and it went all the way down like this way. So when I came back to the chart, I realized that there was a big drop like that, but I was safe emotionally that my position was exited with a 2% drawdown. if I didn't have the stop loss, then I will be losing more. So I was very like not stressed, but I was very how do you say, like very scared of how sometimes how aggressive the market can move without me watching the markets. So that was a big lesson, but ever since I always make sure to put the stop loss and take 2% risk to stop loss. Yeah, and I also get some questions about the leverage, like how much leverage should someone use, and based on this risk management to stop loss to 2%, you don't have to have high leverage. For me, I'm using only up to 50 leverage, but I don't usually use 50 leverage, and I never usually calculate leverage. Simply, it's calculated automatically when you execute trades. But more important thing for me is the risk management to stop loss. Make sure it's 2%, and monitor chart afterwards until you set the break even is more key. So for myself, I take 2 positions every time I enter trades. Like in this one too, there are actually 2 positions because you see 2 stop losses here. There are 2 stop losses. I take 2 positions. When you take 2 positions, each position have to be 1% risk. 1% risk. So 1% times 2, I'm taking down to stop loss. So, and if you take 3 positions, then that will be 0.3 times 3, and so on. So, no matter how many positions you take per trade, the stop loss should be 2%. Is also the key to success in the long run. So that was about my analysis today and lecture today. So hopefully you enjoyed today's lecture today, and I hope we have a great day today, great happy Friday, and great weekend. And I will see you in the next one. So until then, please stay healthy and stay safe and stay gold. All right, bye for now. Mata ne. Thanks so much.